Come on, fine. Read the question.
A vehicle costing 20,000 is depreciated by 20% per annum on the diminishing balance method. What? Okay, I know this.
What is a depreciation charge at the end of second year? So I have year, cost, depreciation, net book value. Year 1 is 20,000. Depreciation will be 20%.
Will be 3,200.
16,000.
How did you get 3,200?
You do 20,000 into 20%, and then whatever answer you get, you minus it from 20%, then you again take 20% of it.
If you do your method, she is confused.
16,000 into 20%.
I did the same method as this.
12,800. So what is the depreciation at the end of year 2?
3,200.
3,200. With me?
Yeah.
Second question. A machinery bought 2 years ago for 20,000 is sold for 13,000. So what is the cost of the machinery?
20,000.
Minus accumulated depreciation, what will you get?
Net book value.
It is sold for how much?
13,000.
13,000.
Hey, miss, this came in our paper.
Plant and machinery is depreciated by 10% on costs. Okay, ma'am. So this was bought 2 years ago. Okay. And plant
Yeah.
and machinery is depreciated at 10% on cost. So 10% of 20,000 will become how much?
2,000.
2,000.
Since it was purchased 2 years ago, so it would be depreciation for 2 years. Yeah.
Yeah.
So accumulated depreciation is what?
4,000.
4,000.
4,000. What is the balance of provision for depreciation of plant and machinery account after this sale? If the provision for depreciation before the sale was 28,000. Now listen to me. Provision for depreciation account. What balance does provision for depreciation account have? Debit or credit?
Credit.
So 28,000 will be on which side?
On the credit side.
And if you're disposing the asset, which side will you dispose the depreciation of the asset that you're disposing?
Debit side.
Debit side. So what is the accumulated depreciation of asset disposed?
4,000.
See, the asset was for 20,000. Depreciation was 10% on cost. And it was bought 2 years ago. So this is the depreciation of asset disposed. They want to know the balance on the provision for depreciation account. How much will it be?
24,000.
So the balance on the provision for depreciation account will be how much?
24,000.
Done. Option D. Are you with me?
Yeah.
Come on, third one. Read and try to do it yourself.
Oh, this.
How do you find the depreciation?
You have to do 20,000 minus 10,000 upon 5. Am I right?
Minus scrap value, minus residual. No. Yeah, minus scrap upon useful life. Yeah. 20,000 minus.
So what is the depreciation?
2,000. So
2,000. I want to
1,000
find the rate
divided
of
by
depreciation.
20,000 into 100.
What is the rate of depreciation?
10%. B.
Depreciation upon cost.
Into 100.
So 2000 upon 20,000 into 100. 2000,
That's 10%.
20,000 into 100. So it is 10%. Are you with me?
Yeah.
Let's go to the next one. What is the main purpose of charging depreciation?
To show the assets at their realizable value.
Yeah, in the balance sheet. Even I think it's that.
No, to spread the cost of an asset over its estimated useful life.
I think I did the useful life while in the paper, so I think it should be correct.
The main purpose of charging depreciation is to spread the cost of asset over its estimated useful life.
This came in the paper?
No, something like this came.
Let's do the next one. On January 1, a machine is bought for 12,800. Two methods of depreciating the machinery have been considered. Straight line and reducing. What will be the year's net profit? How will be the year's net profit be affected if reducing balance method is used rather than straight line method? That means I can either use straight line method or reducing balance method. If I use this, how will the net profit be affected? Let's see. In straight line method, what is the cost?
12,800.
Residual value?
2,800.
And it's spread over 4 years. So what is the depreciation per year?
1 minute. 2,500.
The depreciation for year 1 will be 2,500. And the depreciation as per reducing balance method for year 1 will be how much?
30% of 12,800, no?
3840.
Yeah, 3840.
Okay. Now if I'm using the straight line method, the depreciation that would go in the income statement would be how much?
2,500.
And if I use the reducing balance method, that means the depreciation that would go in the income statement is
38,400. 3840.
That means extra amount that will go in the income statement is how much?
1 minute, I'm telling you. 1340.
Yeah, so it'll be D.
1340. That means
Yeah.
expense will be overstated by 1340.
Yeah.
So the net
So
profit
profit
will be
decreased by 1340.
decreased by
1340.
1340. With me?
Yeah.
Sixth one.
Okay.
Come on. At the start of the year, a car was purchased for 5,000. By the end of the year, it was written down to 4,500 in the books. So at the beginning, it was purchased for 5,000.
Yeah.
And at the end, it was written down to 4,500. That means in the year 1, I have charged depreciation of how much?
500.
500.
Then it was then revalued at the end of year 2 at 3,800. So that means at the beginning of year 2, its value was how much?
4,500.
4,500. So what value will appear in the balance sheet at the end of year 2?
700.
No. It was revalued at the end of the balance sheet in the second year. How much?
3,000.
3,800.
At the end of year 2, this same car was revalued at how much?
3,800.
So in the balance sheet, what do you write?
The
Do
net
you
book
write
value.
the cost of the asset? Do you write the depreciation of the asset, or do you write the net book value?
Net book
Net
value.
book value.
So at the end of the year 2, this will be the thing that is written
Net
in
book
the
value.
balance sheet.
Oh
Yeah.
yeah.
Yeah,
Hmm.
3,800.
Oh, this was so easy.
With me?
Yeah.
Come on, seventh one. Motor vehicle is depreciated at 20% per annum using which method?
A reducing balance method.
A motor vehicle which costs 20,000 is sold after 2 years.
Net book value.
Sale resulted in neither profit nor loss. What is the sale price? Okay. I have
So
year
miss.
1. I have year, cost, depreciation, net book value. Year 1. What is the cost?
20,000.
Depreciation 20% will become how much?
4,000.
2,000. 4,000. Sorry.
Net book value 16,000. Year 2.
16,000.
Depreciation 20% will become how much?
3,200.
3,200. What will be the net book value?
12,800.
12,800.
If there is no profit, no loss, that means I
That's
have sold the asset for
12,800.
so
C.
option C. With me?
Yep.
Eighth one.
Oh.
A computer network is costing 100,000, depreciated straight line method 25% with no residual value. What will be the net book value at the end of year 3?
25,000.
1, 2, 3. 100,000 is the cost. 25%.
Yeah.
25,000, 25,000 and 25,000. So at the end of year 3, 100,000 I will minus 3 years depreciation of 75,000.
So that's 25,000.
So at the end of year 3, the net book value will be 25,000. Yes? Ninth one. Non-current assets cost is 8,000. Sold for 4,800. Cost minus accumulated depreciation gives me net book value and it is sold for 4,800. Cost is 8,000. Accumulated depreciation is, I don't know, but I know the net book value.
Yeah.
What is the profit or loss on disposal?
Accumulated depreciation is 5,000.
I do not need to know the accumulated depreciation, do I?
No, you don't. You're right. 1 minute. Miss, it's a profit for 1,800.
Done?
Yeah.
Come on, 10th one.
Cost.
A business depreciates its non-current assets using the straight line method. Assuming there is no scrap value, on which amount the annual depreciation charge is calculated?
On cost, no?
Yes, it is on cost. Ira is there?
Yeah, you're
Come on, 11th one. What is the depreciation charge at the end of year 2? So 60,000 into 25%, year 1. What is the depreciation charge for year 1?
The answer is A,
15,000.
11 to 15.
60,000 is the cost. 45,000. Year 2 net book value is 45,000. 25% 11,250. What is the depreciation charge at the end of year 2?
11 to 50.
11 to 50.
Yes?
Yeah.
Come on. 12th one. Try. Machine is purchased at the start of year 1 for 35,000. It is depreciated on the reducing balance method at 20% a year. What is the net book value at the end of year 2? Cost, depreciation, net book value. Year 1, 35,000. 20%.
7,000.
Net book value.
28,000. 28. Next year, depreciation will be 5,600.
What is the depreciation for year 2?
5,600. So it will be
Net book value.
22,400. C. 22,400.
Yes?
Yeah.
Come on, 13th one. Company buys a motor van for 12,600, sells it 4 years later for 3,760. For 3,750. When the provision for depreciation is 7,400. What is the entry in the income statement? Can you tell me the net book value?
For 5,200.
Yeah.
The income statement, what will go? Either the profit on sale of asset or the loss on sale of asset.
It's lost, so it'll be
Income
Loss,
statement.
income statement will be debited. How much?
1450.
Income statement will be debited by 1450 debit.
Yeah. So it's option A.
You should be very familiar whether it's income statement debit or credit.
Income statement credit.
Now try this sum. What is the annual amount of depreciation? Business buys a delivery van for 12,000.
For 2,000.
Its estimated useful life
Yeah,
is
even I got
2 years.
2,000.
Sorry?
12,000 minus 4,000 upon 4, which is 2,000.
Okay, fine. Option B. Go to the next one. Two companies each purchase a car for $10,000 at the beginning of year 1. Company G uses straight line method and company H uses reducing balance method at 20% per annum. What will be the depreciation charge between the two companies for year 2? So it's buying for 10,000, both the companies. Depreciation for year 1 will be the same. No, depreciation for year 1. Company G uses straight line method, right?
Yeah.
So straight line method and what percentage? 15%. And company H is using reducing balance method. So this is the net book value. Depreciation for year 2 for company G will remain the same. Yes?
Yeah.
For company H, it will be 20% of 8,000. So it comes up to 1,600. What is the difference in the depreciation charge between the two companies for year 2? So
Okay.
company H is 100.
Yeah.
Company H is $100 greater. Yeah.
Miss, but dep 1 में that is, dep 2 में, okay, yeah, you're correct, sorry.
You sure?
Yeah, I got it now. I was seeing dep 1 का now.
Okay. Next one. At December 31, a firm's balance sheet shows machinery at cost 52,000 and provision for depreciation on machinery 23,000. Depreciation for the year is calculated at 20% on cost. After the balance sheet is prepared, it is found that machinery repairs of 2,000 has been debited to machinery account. That means there was 2,000 repairs and I had debited it to machinery account. So actual cost of machinery was not 52,000, it was 50,000. Yes?
Yeah.
What should be the corrected balance on provision for depreciation account? So what has happened is I have charged depreciation on 2,000 extra. Are you with me?
Yeah.
2,000 was the amount of repairs.
So 21,000.
2,000 was the amount of repairs.
Yeah.
And this 2,000 I put in machinery. I put in machinery and I charge depreciation on 2,000. So what would be the depreciation that I charge on 2,000?
400.
400. So the provision for depreciation is more by 400.
Yeah.
So if I'm correcting it, I have to reduce it by 400.
Yeah.
So what will be the correct amount? It would be 23,000 minus 400.
22,600.
So the corrected amount would be 22,600.
Okay, now I understood this.
Are you sure?
Yeah, मिस पहले मेरे को लगा कि 2000 माइनस करना है, पर now I got it.
Recording.
Oh, sorry.
Okay.
Yeah.
You have to remove only the depreciation charge of the extra amount. Come on, 17. How are non-current assets normally shown in the balance sheet?
At net book value.
Yeah.
At net book value. How is the balance on provision for depreciation of motor accounts shown in the financial statement?
It is deducted from the non-current assets.
It is deducted from the non-current asset. You have cost, depreciation to date, and net book value. So it is deducted from the non-current assets. B. 19. X and Y each purchase a machinery for 20,000 with an estimated useful life of 4 years and final scrap value at 4,000. X depreciates his machinery at 40% reducing and Y at straight line. How much will the second year's depreciation charge by X differ from that charge from Y? How will we do? Come on, start doing. What did X use?
X use reducing balancing method.
So how much will second year's depreciation charged by X differ? How will the second year's depreciation charged by X differ?
Miss 800 more for X. So D.
800 more for X.
Yeah.
Come on, 20th. Do.
So it's a profit on sale of. No, sorry, it's a loss of 200.
Loss 200.
My bad, yeah, it's a loss.
You always do this. Make this box. You will get the correct answer.
Oh,
Okay.
yeah.
Next one. His old machine had a net book value of 6,000 and he exchanged it for a new machine of 5,000. The balance being paid in cash. What is the total charge of depreciation? Trader buys a new machinery of 20,000. His old machinery, which had a net book value of 6,000. He removed this and he got a new machine at a value of 5,000. The balance being paid in cash. And the balance he has paid in cash. 15,000. What is the total charge of depreciation to the income statement? So first look over here. What is the depreciation charge of 20%? It will be 4,000. So in the income statement, he will have two things. First, he will have the depreciation on new machine. What is the depreciation on new machine? 4,000. Are you with me?
Oh, yeah, okay.
What is the depreciation on new machine? 4,000. Now what has happened? He had a machine whose net book value was 6,000. He gave this machine and got a new machine. For how much? 5,000.
5,000.
So that means I can say it is exchanged it and got something of 5,000. That means he has sold the old machine for 5,000.
Oh.
So a machine whose book value was 6, he has exchanged for 5,000.
Yeah.
That means he has made a loss on exchange. Loss on exchange of how much?
1,000.
1,000. Loss will be debited to the income statement.
Yeah.
Will the loss be debited to the income statement?
Yeah.
So the second thing that will go to the income statement will be loss on exchange of machine. Please read carefully and let me know.
Yes. No.
Yes.
Yeah.
So what is the net effect? What is the total charge to the income statement?
This will be 1,000 a.
No, dear. There are two things that you will charge to the income statement. First thing, you will charge depreciation on this 20,000.
Yeah, so 4,000.
And second thing, you will charge the loss on exchange.
Okay, so you
5,000.
plus 1,000, so 5,000.
Two things you will charge to the income statement. Don't forget.
Yeah.
All the losses and expenses will go to the income statement. So you will charge two things to income statement. First thing you will going to charge is the depreciation for the year. And second thing that you're going to charge to the income statement is loss on exchange. With me?
Yeah.
Come on. Why does the business provide for depreciation on non-current assets?
To ensure matching principle is applied.
When preparing the financial statements. 23rd. For which category of non-current assets revaluation method is most appropriate?
Loose tools.
Next. X buys machine on 1st January for 10,000 and he depreciates it by 20% using straight line method. X sells the machinery in 2003. That means he is depreciated for how many years?
1 year.
For
Not 3 years.
2000 he depreciated and he depreciated in 2001 and he depreciated in 2002. He depreciated in 2000, he depreciated in 2001 and he depreciated in 2002.
Net book value is 4,000 and he sold it for 3,000.
First you tell me how many years he depreciated for.
3. So you
3
do
years.
What is per year depreciation?
2,000.
2,000.
So for 3 years, what will be the depreciation?
6,000. So 10,000
What
minus.
is the cost of the asset?
Yeah, minus the depreciation. So
Accumulated depreciation. The net book value will become how much? And he sold for how much?
3,000. So loss of 1,000. A.
You always do this method. Please don't use your brains and shortcuts.
Yeah.
Come on. Total amount of depreciation for the first 2 years. What method I will use?
RBM.
1, 2. Cost is 5,000. Depreciation
1,800 C.
So total depreciation is how much?
1,800.
Come on, next one. A trader provides the following information. Cost of loose tools, value. 2003 he purchased another and value at the end. How much is charged to income statement for depreciation for the year ended 31st December 2003? So in 2002, what was the value of the equipment?
1,100.
1,000.
Yeah.
Then he purchased another equipment for how much? 20.
20.
What is the value at end?
1,002.
No, 900.
So what is the depreciation?
1,000 plus
Plus
20.
purchase minus end value.
120. C.
How much?
120. So we see.
That's 120.
Got it?
Yeah.
Let's go to the next one. Machine was purchased on 1st January 2003 for 12,000. It had a working life for 8 years, and when it was sold, it would be sold for 2,000. What is the depreciation per year?
You have to do, okay.
What is the depreciation per year?
So 12,000 minus 2,000 divided by 8. 1,250.
Yeah, 1,250.
Okay, in 2003, he had purchased it for 12,000. So depreciation of 2003 will be how much?
1,250.
So what is the written down value or the net book value at 31st December?